Hey everyone, and welcome back. On this channel, I spend a lot of time talking about how to analyze businesses, interpret financial statements, and ultimately how to make really good long-term investments. But how do I go about finding businesses to research in the first place? So in today's video, I'm going to show you exactly how I filter out 99% of stocks in the first 10 minutes so that I can focus my research and analysis on the 1% of businesses that are actually worthy of investment. And by following the simple steps that I go through in today's video, not only will you save a ton of time when researching and analyzing companies, but you will become a better investor because you will train your mind to cross out and quickly avoid businesses that don't meet certain characteristics that ensure or allow you to massively increase the chance that you're going to invest in a company that is going to be surviving over the long term and then delivering you significant returns in the future. So if you do enjoy today's video, all I ask from you in return is that you leave a like on the video. It takes you 2 seconds and it helps me out a ton. But with that said, let's jump into the video. The first thing you want to do is identify the markets and industries that you are actually capable of understanding, because you will have zero clue with how to understand the vast majority of businesses. And that's not an insult. Even Warren Buffett, arguably the world's greatest investor, thinks that he can understand less than 1% of stocks.
I would say that maybe 5% of the companies are within an area of my circle of competence. There's something I should be able to understand.
How many businesses you actually understand is completely irrelevant. What is relevant is understanding which ones you do understand and which ones you don't. So what you want to do is simply write down a list of industries, products, services, markets, and businesses that you have either worked in or with before, areas you're passionate about, or products that you are a consumer of. Instead of drifting towards biopharmaceuticals or genomics or something similar to that because you think that it makes you seem smart towards your friends, invest in areas that you deeply understand or already have a passion for or a little bit of understanding, because that little bit of intuitive closeness that you have to products or services or an industry because you've worked in it or you're passionate about it gives you a massive advantage. And that advantage simply is that you will avoid many of the simple, stupid mistakes that come when you invest in complex industries. Of course, it's not enough just to look at the products and services you use and buy the stocks in those companies, but because you use those products and services, you avoid making silly mistakes like misinterpreting how a particular business fits into the industry or what are the key drivers that actually make those businesses successful. Oh, and you know what's smarter than telling your friends you're going to make 10x on this genomic penny stock? Actually making money on an investment. Step number 2 is to create what is called Shortlist A, or what I'm calling Shortlist A. It's not really a thing. I don't know why I said it like it was a thing. Shortlist A is going to be the first of 2 shortlists that we're going to make. And Shortlist A is going to be a list of every single publicly available business or stock in the industries that you have written down. So what we're going to do is use Google and search something similar to what I am searching here for when I'm trying to find restaurant-related businesses, because restaurants is an area I am personally passionate about. And fairly quickly, you should be able to make a list of companies in that particular area. Now, some industries are just going to have a handful of businesses. Others will have hundreds of stocks, or maybe over 100 stocks. Hopefully not hundreds, but maybe it has 100 or 80 or 70 businesses in that particular industry. But don't worry at this point if the list is long. If you have a couple of areas you're interested in and you build a list of about 100 stocks on Shortlist A, don't worry. In about 5 minutes in the next step, we're going to eliminate more than 95% of these businesses like that. So don't worry if this list is long. And by the way, you don't have to search for traditional industries or sectors that break up the market. You can search for any kind of interest that you have. For me personally, one that comes to mind is I'm an avid coffee drinker. So one time I did a search for coffee related stocks, and the list that I created isn't a set industry. There isn't a coffee industry per se. I mean, there is a coffee industry, but it's not one of the main industries that break up stocks on the stock market. But I was able to create a list of all businesses that were connected to coffee in some way, whether they were a coffee farmer, a manufacturer, a distributor, or the obvious coffee-related businesses we know, such as Starbucks or Dunkin' Donuts. Before we move on to the next step, I thought maybe I should talk about why exactly we are filtering stocks in this way when the vast majority of people filter stocks by price to earnings ratio, price to book ratio, or looking for high growth businesses, filtering by the financials first. And I think it is absolutely absolute insanity to filter something by financials first and then end up trying to invest in businesses that you have no clue how to analyze. To me, this is the equivalent of trying to find a job by simply sorting by income and then trying to show up to interviews where you have no skills in relation to the job that you're going to interview for. Nobody would do that. What you would do instead is you would first filter by areas that you're either passionate about or areas that you have skills in, so that you can find the highest paying job or the best job that suits you, because jobs are not all about money, I guess, but finding the job that best suits you in areas that you actually have skills in or areas that you're passionate about, because maybe you don't have skills in that industry, but if you're passionate, then you're going to be willing to put in the work to learn what is required to fulfill that job. And to me, investing is exactly the same. There are certain areas that you will have an understanding of, or maybe you don't understand them yet, but you're passionate about them. So you're going to be willing to put in the work to understand how those businesses work. So filtering by that way first makes much more sense than filtering by undervalued businesses or these key metrics such as high growth businesses or high ROIC, and then trying to figure out how to invest in a biopharmaceutical company or some other weird industry that you really don't understand. Oh, and for the few people who are actually into biopharmaceuticals and do understand that industry, I'm really, really sorry. It's just an easy industry that I can pick on because it's really, really complicated, and I am entirely impressed by people who understand how that industry functions. So if that's you, I apologize. You can go ahead and invest in those businesses, but for the vast majority of us, I think we understand what I'm talking about when I mention these industries as being highly complex and out of reach for most people. In step number 3, we're going to be creating Shortlist B. So we have Shortlist A. We are now going to squash it down by about 95 to 99%. And create Shortlist B, which will be the final shortlist. This will be the businesses that we are excited about researching and learning more and then deciding whether they are good investments. For step number 3, you are going to need a couple of free resources. So they are free, so you don't have to pay any money, but you are going to need to make an account with quickfs.net. And this website is fantastic for downloading 10 years of financial data for stocks on a ton of different markets: the US, Canada, Australia, New Zealand, the UK, China, and a bunch of other markets. So it is a really good resource for initially analyzing companies. And by the way, I'm not affiliated with QuickFS in any way. I don't have any special link for you or anything. I just think it is a really, really good service. In fact, if you work for QuickFS or you own QuickFS and you're watching this, then reach out to me. I would love to be affiliated with you because you've created a really, really great site. You'll also want to download a free copy of my stock analysis spreadsheet, which we will be using a little bit later in the video. I'll leave a link to it down in the description below. So what we want to do is we want to take our Shortlist A, which has a massive number of companies, all in industries that we are passionate about or that we understand. And we want to take each of those stocks and put it into QuickFS, and we want to filter them by a select few criteria. And these are essential criteria that businesses should have before you invest in them. And by using QuickFS, you can see if a business has or meets these criteria in less than a minute for each of these businesses, meaning you can cross them off really, really quickly and eliminate or cut down, let's say 50 businesses to 5 businesses in the space of about 5 minutes. So the criteria that you want to filter businesses by are the following. The business needs to have 10 years of financial data. You'll enter some companies into QuickFS and it will only show you data for the past 4 or 5 years. That will be because there isn't 10 years of history, or public history, I should say, for that business yet. Earnings per share on the income statement should be positive in 9 out of 10 years. We want consistently profitable businesses. Revenue at the top of the income statement and EPS at the bottom of the income statement should be consistently growing over the 10 years. Equity on the balance sheet should be consistently growing over the 10 years. Equity should be larger than total liabilities in the latest year. Current assets should be larger than current liabilities in the latest year. Shares outstanding on the income statement should be flat or declining over time. Free cash flow should be positive in 9 out of 10 years and growing over time. Again, we want businesses that are consistently cash flow positive. By filtering businesses by those criteria, you will eliminate 95 to 99% of businesses that were on Shortlist A, leaving just the businesses that are consistently profitable, growing over time, and with relatively low debt. The only exception to those criteria is a business is allowed to have 1 or 2 bad years, right? So if in 2020 in particular, because we had the pandemic, the business's revenue declined or they weren't profitable or maybe they took on a bit of debt, then be lenient and put that on your shortlist B still. Put it on your watch list because you can investigate whether that is a short-term problem that will be fixed in 2021 and beyond, or whether it is actually the business deteriorating. But the rule of thumb here should be that you can be lenient if they have 1 bad year. Once you have your shortlist B, you want to go through one by one of those businesses and make a copy of my free stock analysis spreadsheet and enter in all of the data. And I have a separate video going through and explaining how to enter in all of the data. I'll leave it linked down in the description below. But once you've entered the data into my spreadsheet, you can use my spreadsheet as the core of your analysis when you're researching and analyzing that business and figuring out if it is a great business and then if it's at an appropriate price to make an investment. And I go through the 4-step stock analysis process that I use to analyze businesses in my 4-step stock analysis playlist. Surprise, surprise. I'll leave it linked down in the description below. There's about 10 videos in there, I think 10 or 15 videos, and each one goes through each important component of that process. So there you go. That is exactly how I shortlist businesses and ultimately find really, really great investments. I'd love to hear your thoughts down in the comment section below. Is this how you filter through businesses, or do you use some other kind of method or stock screener? I would love to hear your thoughts down in the comment section below. And as I said at the start of the video, I would very much appreciate it if you did get some value out of this video, to leave a like on the video and of course hit subscribe if you want to stay up to date with more content in the future. But with that said, I'll see you guys in the next video.